Good afternoon, everybody. In just a few moments, we're going to play a few clips from today's CNBC halftime report. Once the news is over, stay tuned because we're going to dive right into the charts and take a look at some of the technicals of the stocks that featured in today's halftime report. We're going to take a look at some of the key areas of support and resistance and provide an analysis to see if the technicals actually back up with what the CNBC guests are saying. Stay tuned.
Me for the hour today, Josh Brown, Stephanie Link, Jenny Harrington, Malcolm Etheridge. PPI was cooler, yields are lower, oil was down. We were 50-50 on a rate hike for September. Probably a hold seems more likely today after these most recent inflation prints. Decent mix of sector performance today. 8,100 remains in the line of sight, that according to Citi. And they lift their earnings estimates as well. Plays right to the theme we've been talking about. 8,000 seems to be the floor on the street. They keep bumping up their numbers. Why? Because earnings remain so robust. FactSet today, the S&P's highest revenue growth since the fourth quarter of 2021. The highest net profit margin since FactSet began tracking that metric all the way back to 2009. That's the story.
That is the story. You're absolutely right. Look, there are people in this business who choose to direct their energies focused on Fed gossip and what two words might be missing from the statement this week, or they will look at one data point that agrees with their priors, like a retail sales miss or something to do with ISM, which I don't even know what that stands for. I'm only around for 30 years. I'll figure it out at some point. There are people that choose to spend their time on that. And then there are people, I think, like the people on our panel that look at earnings, listen to what companies are actually saying to their shareholders when they report, focus on price and trend, and mostly get things right. This has not been a difficult year. We had a couple of thrills and spills. We had a January, February sell-off. We had another one in March. We had some geopolitical stuff. What else is new? But overall, the earnings story has been so obvious, like a smack in the face. Every time we go through an earnings quarter, it's the same story. Beat, raise, above everyone's expectations. Companies spending more on CapEx than even we would have thought the prior quarter. And every sector is now participating. It's 10 of 11 sectors with earnings growth. It's all different companies, all different walks of life. It is not a tech-specific rally, although tech looks unbelievable right now, coming back from the lows of July. And if you get those big picture things right, you don't have to do Fed gossip. Spend your time doing something else. Read a book to a child. Like literally anything
Have your
other.
child read a book.
Trend is higher. Stocks are acting great. The advanced decline line hit an all-time high last week. Earnings are outperforming in every sector. You need another data point, or can you just go with what's happening right now? I don't need another data point. I'm good.
Knocking on 7,800 on the S&P, right?
Yeah. So the Atlanta Fed tracker is at 5.8% GDP growth for this quarter. Now it's going to come down probably over time, but we're still well above trend, and that's a massive acceleration from the second quarter. So even if we wind up at 3%, that's double of what the second quarter came in at. So to me, it is about the economy because that flows into earnings. Now the inflation reports are still high, they're still elevated, but at least they're not accelerating from here. And we talked about the unit labor cost, Scott, last week, which I pay more attention to than the CPI, PPI, and also the productivity numbers. 1.7% productivity. We averaged 2 to 2.5% over the last 10 years. In the 50s and 60s, the Industrial Revolution, it got to as high as 5%. So we have a long way to go on productivity, and that will help inflation too. So it's the consumer, and we get retail sales this week, so that'll be a big one. But also, the banks are telling you that the consumer is fine. The H8 data comes out every week, and the loan growth is anywhere from 8 to 10% for the big 6 banks. But not only that, credit quality is better. Delinquencies are coming down. Net charge-offs are coming down. Capital is going higher for the banks. So the consumer is consuming. And of course, we all know about AI and the food chain. That's alive and well. We've got a number of companies this week that told us once again. And that is having a very positive effect on the overall earnings. Profit margins, yeah. I mean, for the S&P 500, up 250 basis points year over year for the S&P 500.
I just said that
That's
the
huge.
highest since FactSet began tracking the metric.
Yep.
All the way back to 2009.
That's
even
huge.
even Jenny Harrington's bullish. I don't know what to tell you. Make a full screen.
I feel like you want to argue, but you are bullish.
No,
I know.
she said as much last
It
time.
makes me very
right?
uncomfortable to
I
be this
know.
way.
You're like, but what? Wait a minute, I'm bullish. What am I going to say? Seriously, you're pretty bullish in the near term. You said last time you were on.
Well, I think Josh said it in a funny way, but it's serious. When you said do something better, and I've spent years waking up every morning and having something kind of like jerk you awake with some horrible market news. It's been quiet for 2 months now. It was quiet through June, it was quiet through July, and it's been quiet in August. And that's real. And I said to someone, oh, well, it's August and it's actually quiet this year. And they said, isn't August always quiet? No. Last year we had the Japanese yen carry trade unwind, and that was really scary. But every morning it's been like news that's expected.
We had the hedge fund blow up and the margin unwind, but you don't feel that in your portfolios.
No, but also it didn't really do that much.
Well, that's part of the resiliency of the market, right?
Exactly.
Like the bears, the sharks, right, have gotten some chum in the water from time to time, and they attacked it, and they thought that there was going to be then this endless supply of stuff to go after, and then the tuna disappeared, and the sharks had to swim away, and then the waters looked calm again.
This is a great analogy for summer. Yeah, I'm sure everyone wants to go swimming now.
Yeah, up on the Cape.
On the Cape.
Do people actually go in the water up there?
I think they do.
They do?
I would. I'd take the risk. It's so nice. It's so hot out.
They have big signs on the beach up there, like literally, with the big pictures of sharks.
Straws?
Yeah, I've seen it.
That's funny. But I think the thing is, there's a mechanical nature to the earnings that are coming in. So when we see these huge profit margins and when we see these beats, there's not risk of them disappearing, right? There's not risk of things of some one big thing swooping in and knocking everything off the rails. So there's a calm and a comfort right now. I'm trying, to your point.
It's called pricing power. These companies have more pricing power than ever before in AI, in the food chain, in consumer. They have pricing power and they're taking it, and that's why margins are going higher. That is so powerful because you get the operating leverage.
Yeah.
You have 50% earnings. You get 15% total revenue growth and the margin expansion. I mean, that's the answer. That's the 50%. That's why you're getting 50% growth.
Yeah, and I think the challenge, all kidding aside, for someone like me, is staying calm and just accepting it and saying, like, yes, we're in this moment. That's okay. And I had a client call the other day, and he's like, Jen, like, shouldn't we be getting out? Aren't there storm clouds on the horizon? I feel like everything's terrible, and all that. And I said, yeah, but for now, and for the next 6 months at least, like, we're okay. You have to just live with that, and you have to tamp down the fact that we all have a little PTSD from wild markets, and you just have to tamp it down and say, for now, we're okay.
Malcolm.
I think Tony Pasquarello's note perfectly captures my feeling on this. There's a lot of distractions out there that have happened post-earnings that could take you in a bunch of different directions, but the only thing that really mattered during this earnings period was the fact that cloud growth accelerated so substantially that it justified all of the CapEx spend that we've been talking about on this show for years on end at this point. So
let me say more of what he said. I'll come right back to you, too. So this is Goldman's Tony Pasquarello. He talks about tech in his note today, and he says, quote, if there was one other takeaway from the reporting period that struck me, it was the growth rate of cloud revenues for the hyperscalers. Part and parcel of that, Microsoft and Amazon drew a clearer link between AI CapEx and return on invested capital. As long as that linkage exists and the stock market rewards it, I have a hard time seeing any slowdown in spending. So that's what you're referencing from Tony today.
It is. Those two companies, Microsoft, Amazon, along with Google and Meta, are spending at a wild pace, $800 billion or so this year expected. As long as that continues to go, and as long as any of those four companies continues to show the cloud growth that justifies that level of spend, we've bought ourselves another 2 or 3 months until the next earnings period. That's really where we are right now.
You know what it justifies too? If the CapEx spending is justified and you start to see the return on the invested capital that you're making, and then you look down the food chain of who's getting the money that they're spending, it's why I bet Stephanie Link bought more Micron. I mean, the chips have looked pretty good. You got confirmation, I think, of demand and spend from the hyperscalers. You got it earlier this week from some of the earnings reports that were out as well, whether it was CoreWeave or somebody else. So tell me why you bought, right, or Supermicro.
Or Cisco. Even.
Yeah.
I mean, we're getting confirmation that the growth is accelerating, but at the same time, you're still hearing about headwinds from memory prices. And that's positive for Micron because they can actually see.
Hynix too, right? That stock's up. Last I checked, a bunch today. Right. So tell me more about the buying more of Micron right now.
Right. So I started buying it when it's down 40% from its highs. It's now down 30% from its highs. It hasn't really recovered. And I do think that the visibility is substantial. They have $100 billion in bookings between now and the end of the decade, take or pay contracts. So they're going to get the money no matter what. They got $22 billion in cash on hand. And I think this company has, the demand is going to exceed supply at least until the end of 27. And I think as a result, this company has something like $40 in earnings power, making the stock awfully cheap with very good visibility. So I just wanted to continue to buy, double down, average in, and hopefully I'm making the right call. Yeah,
so the chip names, as we said, are having a pretty nice week. I mean, Nvidia reports in less than 2 weeks, Malcolm. BofA raises their CPU TAM today to 210 billion plus from 170 billion. They reiterate that stock as their overall sector top pick. It speaks to the level of demand that we think we're going to continue to get. If you needed more evidence of that, maybe you got it as well when you had Jensen and company in that extraordinary event on this network a couple days ago on what they plan to finance in terms of this build out.
Yes, and I am starting to feel like the only sane person in this crazy market looking at this chip trade. Basically what the announcement from Nvidia and others is telling us is that we're going to start talking about collateralized chip obligations as a separate asset class at some point, right? That's how far into crazy town we've now gotten. You have moves of 5% or more in each one of these chip names that a lot of times the investors in them or the people trading them more realistically don't even necessarily understand the difference between the GPU versus the TPU versus the next thing and the next thing. It's just that the stock has gone up, and so I expect it will keep going up, and so I'm going to buy this one. And so not to say that the demand isn't real right now within the space, but we have to also consider how long it takes to build out the foundries to actually deliver the chips and how long it takes for the data centers to actually get connected to power. And by the time all of those things happen, the demand that we're seeing that we're so excited about today has waned, and we've moved on to the next thing. And so I think that anybody who's buying a lot of these companies that we're talking about, not talking Stephanie specifically because she's been in a name like Micron for a while and is just adding to a position that has already done well, but the people chasing this trade so late in the game, it just looks nuts.
Are there still chasers?
Yep.
No?
Well, look at Cerebras yesterday into the earnings. I mean, it was 15% on a stock that is basically trying to do the opposite of what Nvidia does and unseat the incumbent, basically. And so you had a lot of people who had wild expectations because the stock had already gone up so hard, trying to catch that wave. But I don't mean to sound disparaging, but I don't think people really understand what the company does. Right. And I mean that in terms of its place in the chip sector. I think people were looking and saying semiconductor stocks are going up. I need to buy a semiconductor stock that has been doing well recently. But just look how recently the company came public, and it's still operating at a loss, according to their own earnings.
But you own the stock. And
I own the stock.
And you said yesterday that you would be inclined to add to it if it pulled back. Well, opportunity knocks.
It didn't knock hard enough. So I thought this stock was actually going to get slammed based on the earnings report that we got, because basically the guidance said we're operating at a net loss of about 30%. We're going to take that down to about 18% going into the next quarter. Well, the company's still operating at a loss. It's very early days for this company. So I set my high water mark at 175 after it came down from its IPO peak. I said that is the most I'm willing to pay for this stock. And I actually expected that it would get crushed based on that print, and I'd have an opportunity to buy close to its June lows, which didn't happen. It's still actually trading pretty positively today.
I think we're somewhat, not we on the desk, but just in general, I think sometimes we have a tendency to overthink things a little bit too much. If you're playing in these names, and Malcolm makes a valid point, there are a lot of people, they're just hitting the buy button because it's green and somebody else hit it. And I totally understand that. I just don't think that's any different than it's been on Wall Street since the 1700s. I just think that's human nature. People just feel safety in crowds. The whole crowd is buying memory stocks. I'll buy it and I'll research it, you know, when it goes down 10% to make myself feel better. Like that's, it's just, I don't care. I guess my point would be like, I'm not trying to correct anyone's behavior. It doesn't matter to me. Big picture, we have a strategy called Porterhouse. I look at the top 10 names today, and I'm looking at SanDisk and Western Dig and Micron and Ciena, Astera Labs, Dell, Jabil, KLA, AMD. These are the stocks in our portfolio. Those were also the top stocks yesterday.
But what is the likelihood that all 10 of those stocks continue to go up and to the right in a succession?
Not
that's the way they're being traded.
I agree. That's not the question that I want to ask, though. The question I want to ask is, do I have risk management in place so I can be in those names in a concentrated sleeve within a larger portfolio? If I don't, I'm in big trouble, to your earlier point. I think the people who are in these names, they have some discipline. It's hard for me to believe professional investors are in Dell and Astera and Ciena, and they're just in there naked and they plan to hope for the best. I think people are utilizing stops, they're utilizing options, and we know that we're not going to see double-digit moves every week out of this group of names. But we also know a lot of people want to be in them. I want to be in them when they're acting this way. I think we have to give the market some credit that not everybody is running a 4-to-1 leveraged hedge fund like the one that blew up in July.
So why do you think Nvidia has underperformed the stocks by 59%?
Multiple compression.
Well, I understand that, but I mean, why? The fundamentals are strong. Because I recently bought it because it has.
I refuse to sell it.
And I understand that.
Yeah.
But is it that they're selling
circular
Nvidia?
deals?
Are they selling Nvidia
Can I give you three answers?
and Broadcom? Because both of them have lagged.
I'll give you the three
they're
reasons.
They're selling them, and they're buying this other
Right.
stuff, which has much more alpha, which is a little scary.
Because how do you make a $5 trillion stock go to $8 trillion?
Yeah,
it's
but
really hard.
I understand that, but the growth is still there, Josh, and the stock is trading at 14 times for 85% revenue.
We're on the same. We're in the same trade. The question is though, can you envision a $40 billion component supplier to the data center getting to 80 easier than a $5 trillion?
You know
so
what I think it is?
We understand, like, it's harder at a larger market cap to get at. Now, in my opinion, you're right, and that Nvidia announcement with the Justice League of Private Equity.
Yeah.
The stock should be $275.
Right.
Okay, immediately. And if it wasn't a $5 trillion market cap, it probably would already be there.
Well,
Right,
and then we also talk about free cash flow, and these guys have enormous free cash flow, $90 billion. It's going to double between now and the end of next year. So the hyperscalers are right, but the whole point is everyone was concerned about the hyperscalers and the free cash flow that is we're seeing depleted. These guys, it's actually accelerating on top of that.
I think it's interesting, though, because when Josh said, like, the professional investors, we're staying put, right? You're staying put. But what I've seen in the last few weeks is these crazy moves on Cerebras, right, on CoreWeave. That has to be the marginal investor. So with a $59 billion market cap on something like CoreWeave, right, the marginal investor can make a huge impact. The marginal investor can't make any impact.
I think that's pods. I don't think retail is moving.
You think pods are moving those stocks up 20% one day?
There's a little bit of 2x. There's a little bit of 2x ETF, but I think the buyer of CoreWeave that takes the stock up 20%, and then it gives nothing back.
I think though the thing is the majority of holders in Nvidia now are the Stephs, are the Joshes, are the mature, buy and hold, going to hold it for a long time, and they just don't have as big a component of marginal investor in them, so they can't move as much. And I think a lot of that move up is just like the crazy town moves, right? It's not the, hey, this is a substantial company.
The crazy town stuff, though, is happening in smaller market cap stocks, higher beta. They want Korean memory names like that.
Yeah, but that drives the whole index up to some degree. I mean, you couldn't have the stocks up as much as it is just on Nvidia. Like, it's got to be the smaller stuff that's pulling it up.
We do have a news update because there is yet another executive leaving OpenAI. Yeah, good stuff. Kate, thanks. It's Kate Rooney. Following all things OpenAI, Anthropic, everything else. What do you think about what's happening here as these companies head towards a public offering, but on different schedules, clearly?
So, I mean, this is. I think we've never before had trillion-dollar startups that got the level of attention and scrutiny pre-going public as we do in this era, and it makes sense because these companies are not just large; they're important. They're important to public companies that have sales from these businesses as part of their own forecast. So everyone's paying attention. But I think private market companies, venture capital backed startups. I know we're calling these startups. It's funny. Anthropic's a 3-year-old company. You imagine if most 3-year-old companies had this much scrutiny on every hiring and firing, it would be chaotic to work there. So I think these companies, this is just par for the course. People join firms, they disagree with somebody, that strategy, they leave, they get a better offer. Everybody's looking for AI talent right now all over the world. None of it is surprising. I think it's very distracting for people who are trying to focus on the big picture. But I understand why we're paying attention to it.
But these guys
matter.
These guys are the big picture, though, because all the spending that we're talking about happening with the hyperscalers is underpinned by spending commitments from both OpenAI
that's right.
and Anthropic. They're 50% of all of these companies' backlog. So they better hurry up and figure out a way to get public quick before sentiment shifts and the window
Nobody
closes.
knew who the chief revenue officer was of Facebook in 2011, a year before they went public.
So it seems Anthropic is gearing up for the fall. As we said, what's reported in the last 24 hours, $2 trillion. That would be larger than SpaceX, which just went out. Speaking of, I used that as a segue to get to Stephanie Link, who bought more.
I just keep buying.
Right.
It keeps going down, and I keep buying.
Citi reiterated a buy today, too. We view space as an emerging opportunity for investors that could reshape many domains.
I just go back to the quarter, Scott. It was so outstanding in terms of overall growth. I mean, total revenue growth of 92%, EBITDA of 191%. All three segments beat on the sales line, and with tremendous growth. The one that we care about, at least in the short run, is connectivity, because that's their profit driver. And that actually, the margins also went higher in that particular division, and they doubled their subscribers. We're all talking about the AI piece of it. That's very exciting. $14 billion in commitments this quarter alone, and I think that's going to eventually be a $60 billion business each year. So I like the story long term. I wasn't anticipating buying it and then buying more on the way down, but it's just, to me, it's very compelling given the growth, and my time horizon is long term.
Okay, so we will take a break.
Okay, so that was the first segment from CNBC. The halftime report. By my count, there were 9 stocks that predominantly featured within that first clip, which we're now going to analyze and dissect. Starting off with Microsoft stock, which we have on the screen for you now. So as a reminder, if you're new to the channel or you need a refresher, we're just going to go through very quickly the Ichimoku indicators, which are the indicators that we use when to assess whether the stock is a bullish stock or a bearish stock, and it can help your decision whether to trade, invest, or steer clear of altogether. So starting with the Ichimoku cloud itself, on this chart here that we have in front of us for Microsoft, this is the Ichimoku chart. Sorry, this is the first Ichimoku indicator. This is the Ichimoku cloud, or sometimes known as the Kumo. Then we have this cloud here, which is the future Ichimoku cloud. There's the blue line, which is known as the Tenkan-san. And then there is the red line, which sits just above it on this chart anyway, and that is the Kijun-san line. Then lastly, we've got this lime green line here, which is called the Chikou span line. And if you're unfamiliar with the charts, these candlesticks here represent the current price action. So using the Ichimoku system then, let's take a look. So the first thing that stands out for us is the location of the current stock price compared to the current Ichimoku cloud. So the fact that the stock price is trading below the Ichimoku cloud here is one of the hallmarks of a bearish stock. So the fact that it's trading beneath this Ichimoku cloud tells us that the very nature of this stock is bearish. In addition to that, you also can see that the red Tenkan-san line here is trading above the blue Kijun-san. Sorry, the red Kijun-san line is trading above the blue Tenkan-san line. And if you see, there is a crossover here on the chart. So ordinarily on a bullish chart, you'd want to see the blue Tenkan-san line trading above the red Kijun-san line. Again, it's one of the hallmarks of a bullish stock, and that's exactly what was happening up until this juncture here. You can see that when that crossover has happened, that is when the stock has fallen into a decline, and it's only traded very briefly before it's pierced the Ichimoku cloud and is now trading beneath the Ichimoku cloud. So again, the fact that the blue Tenkan-sen line is below the red Kijun-sen line is indicative of a bearish stock. The other red flag for us as well is that both the the stock current action is trading beneath both the blue Tenkan-sen and the red Kijun-sen line. And the reason why that is a red flag is because there's literally no area of support for the for the current stock, meaning that the stock has the possibility to fall even further below the Ichimoku cloud. Having said that, I would note that over the past couple of sessions, you'll see that the stock price here it has started to consolidate and move sideways. It's no longer trading on a downwards trajectory or even an upwards trajectory. It's actually started just to move sideways. So it may well be that the stock price doesn't go any lower, but it's just something to watch out for. There is no support for this particular stock. You'll also note as well that the future Ichimoku cloud is red. Again, that's indicative of a bearish stock, and it's also trading in a sideways trajectory. Lastly, the other red flag for us is the Chico span line, the lagging line, is trading below the historic price action. Now that again tells us that this is a bearish stock. These are all the Ichimoku indicators for a bearish stock. So if you are a bull, if you're interested in trading or investing in Microsoft, what would you want to see? Now, ideally, you'd want to see this current price action here push through that blue Tenkan-san and that red Kijun-san line and start to make its way above the cloud, pierce the cloud, and start to trade above the cloud around here. You'd also want to see that blue Tenkan-san line cross over that red Kijun-san line, sort of how it was trading back here. You'd also want to see this future cloud starting to turn green and move in a upward trajectory. And lastly, you'd also want to see this Chico span line here start to trade above the previous price action. So until those indicators fall into place, fall into an alignment, then this is probably a stock to avoid if you are looking to invest for the long term. Next up, we're going to take a look at Amazon stock. So again, this is slightly similar to Microsoft in that the current price action is trading beneath the current Ichimoku cloud. So again, that is the first real sign that we're dealing with a bearish stock. And again, just like with Microsoft, the blue Tenkan-san line, as you can see here, is trading below the red Kijun-san line. And again, that is one of the hallmarks of a bearish stock. You'll see again that up until around here, the blue line was trading above the red line, and so you see that once that crossover has happened, you see this large red candle, and then ever since that large red candle's happened, the stock price has pierced throughout the bottom of the cloud. It's continued to move in a downward trajectory. Another red flag for this particular stock is the future Ichimoku cloud. So it is red and it is moving in a downward trajectory. And then lastly, you'll see the Chico span line is trading below the historic price action, confirming the bearish nature of this particular stock. So again, just like with the, and again, sorry, I should mention, the current price action is trading below the red Tenkan-san and the blue Kijun-san line, which means that there's no area of support underneath it. And this can probably be distinguished from the Microsoft stock, because the Microsoft stock, it was trading, you can see it was actually trading sideways, moving in a horizontal pattern. It bottomed out, whereas this Amazon stock, it's continued with a steady decline, and only now have we seen what could be the bottoming out of the stock. I suspect it is because you'll see that the two other Ichimoku indicators, the red Kijun-san and the blue Tenkan-san line, have also started to move sideways as well. So this line here, it could very well be the bottom of the stock. So again, as with Microsoft, if you're a bull looking to invest in Amazon, ideally you'd want to see this current price action pierce the blue Tenkan-san line, the red Kijun-san line, and start to trade above the Ichimoku cloud. You also want to see the future Ichimoku cloud turn green and start to trade in an upward trajectory. Again, you'd also want to see this blue Tenkan-san line roll over this red Kijun-san line here. And then lastly, you'd like to see the Chico span line trading above the historic price action. Next up, we're going to take a look at Micron. So this paints a very different picture compared to Microsoft and Amazon. And again, the first thing that you'll notice is the current price action is trading significantly above the current Ichimoku cloud. And that is one of the hallmarks of a bullish stock. So that is something we like to see. Next up, you'll see that the current price action is trading above the historic, is trading above the blue Tenkan-sen line and above the red Kijun-sen line. Now, again, that means that should the price start to dwindle, should it start to fall slightly, one would hope that it would use the blue Tenkan-sen line as an area of support. And failing that, there is also the red Kijun-sen line, which could also be used as another level of support. Should the stock price pierce both of those lines, then the next level of support will be the outer perimeter of the Ichimoku cloud itself. And then again, if it pierces the cloud and starts to trade below it, then that is confirmation of a bearish stock. However, we don't have this here. As it stands, the stock price is currently sitting well above both the Tenkan-sen, the Kijun-sen, and the current price action. So another point in favour of the bulls for this particular stock that we like to see is the blue Tenkan-sen is trading above the red Kijun-sen line. Those two lines are very well spaced out, as you can see. They're actually nowhere near each other. So the possibility of the blue Tenkan-sen rolling over the red Kijun-sen is limited. It still could happen, but it is limited. Another thing that we like about this particular chart is the trajectory of the Tenkan-sen line. It's actually moving upward trajectory in line with the actual stock price itself, and you can see here that it looks as though it's currently offering some sort of level of support, which is what we like to see. Another thing we like about this stock is the Ichimoku cloud, the future Ichimoku cloud. You'll see here that it is green, which is a positive, and it's up also moving in an upward trajectory. So again, the fact it's moving an upward trajectory is another bullish indicator. Another thing we like about this particular cloud is the Senko span A and Senko span B line. They're quite far apart. It looks like Senko span A line is going to continue with that upward momentum, and what this does is it will create a funnel for the cloud. And it will make that future cloud a thick green cloud. Now, the reason why we like a thick green cloud is because, as just mentioned, should the stock price fall through the Tenkan-sen and the Kijun-sen, then the next level of support will be the future Ichimoku cloud. And for the thicker the cloud, the more support the stock offers. Sorry, the more support the cloud will offer. Again, another thing that we like about this particular stock is that the Chikou span is trading above the historic price action and also above the historic Ichimoku cloud. This confirms the bullish nature of the stock. And lastly, you'll see that it's some very recent large green candles here and again here. And again, there's this massive gap up here as well. And this is indicative of institutional buying. So this now might be a good entry point if you're interested in buying Micron technology. Again, we're not financial advisors, so do your own research, I suppose. Next up, we're going to take a look at Nvidia stock, which I think reports earnings in about 2 weeks' time. So again, this is another stock which is currently above the Ichimoku cloud, but this stock tells a bit of a different story compared to Micron. And the reason why we say that is because it's got a number of the hallmarks of a bullish stock. By that we mean the current price action is trading above the Ichimoku cloud. You've got the blue Tenkan-sen line here and trading above the red Kijun-sen line, and the current price action is trading above both lines, meaning that there's a good area of support. You've also got the Chikou span line trading above the historic price action, but also above the historic Ichimoku cloud as well. And then you've got the future cloud, which is green. However, one of the things I'm not particularly keen about this stock is that the cloud is traded in a horizontal pattern for the past several trading sessions. Ideally, you'd want to see more of an incline with that particular, with the future cloud. Also, as well as just discussed with Micron, this cloud here is relatively thin, meaning that if the stock price was to fall beneath the Tenkan-sen and the Kijun-sen, that level of support offered by that Ichimoku cloud will be limited. Okay, so next up, we're going to look at Cerebras Systems, which I think reported earnings either yesterday or early today before the bell. I think it was actually yesterday afternoon. And you can see that this was this was a favorite stock at one point, but as you can see, current price action is trading here inside the Ichimoku cloud. Now, I would categorize this particular stock. So usually when the stock price is trading within the Ichimoku cloud, it means that that an equilibrium has been reached and that the stock is in a neutral position. And you have to wait for the next couple of sessions to see whether it's going to provide bullish or bearish indicators. But with this particular stock, I would categorize this as neutral to bearish. And the reason why I say that is because it's got the hallmarks of a neutral stock, but also the hallmarks of a bearish stock. So let's get into it. So as advised, the current stock price is trading within the Ichimoku cloud itself, which would indicate a neutral stock. However, the future cloud has gone red, and you'll see that it's no longer trading in an upward trajectory, but it's actually trading sideways. More alarming, though, is the fact that the blue Tenkan-sen line has crossed over the red Kijun-sen line. So it's now trading, so the blue Tenkan-sen line is now trading down here. And as discussed routinely on this channel, once that crossover occurs, that is one of the hallmarks of a bearish stock. So next up, you'll also see the Chico span line as well, which is all the way back here. And it's trading below the historic price action. Again, that confirms the bearish nature of this stock. So something else that I wasn't particularly keen on about this particular stock, I think it's just the overall trajectory of the stock. Oh yeah, that's it. Sorry, the Ichimoku indicator. So the current price action is trading below both the Tenkan-sen and the Kijun-sen, and there's a very limited area of support now for this particular stock. So you'll see that the only remaining area of support for this stock is the outer perimeters of the lower Ichimoku cloud. Meaning should the stock fall through that, then it will be trading below the cloud, and that will be confirmation of the bearish nature of this stock. Okay, so next up then is SanDisk Corporation. So this has had a good run today. So this is clearly a bullish stock. It has all the hallmarks of a bullish stock, in fact. So current price action is trading significantly above the current Ichimoku cloud. So that's number one. Number two, the current price action is trading above both the blue Tenkan-sen and the red Kijun-sen line, meaning that should the stock start to fall, it's got two good areas of support before it even touches the parameters of the Ichimoku cloud. Again, you've got the added advantage that the Tenkan-sen is trading above the red Kijun-sen line. And that is one of the hallmarks of a bullish stock. And again, in fact, you'll see that there was a crossover back here. So the red up until around here, the red Kijun-sen was trading above the blue Tenkan-sen. You can see that once that crossover has happened here, that's when the stock has been on a gradual upturn here, as you can see, and then that it's actually punched its way through the cloud and then started to trade above the cloud until we get to its current levels. We also like the fact that the the future Ichimoku cloud is moving in a upward trajectory and it's green. The other thing is that the Sanko span A line here is moving away from Sanko span B. And as discussed, I think it was on Amazon, or might have been Micron actually. When those two lines start to pull apart, it creates more of a funnel, future funnel. And the thicker the funnel becomes, the more support it will offer the stock price should it fall through the Tenkan-sen and the red Kijun-sen line. Also note that the Chico span line back here is trading above the historic price action and the historic Ichimoku cloud, again confirming the bullish nature of this particular stock. Last but not least is SpaceX. So this is a stock that we've discussed quite a lot on this channel purely because it features quite a lot on the CNBC halftime report. Again, I would describe this current stock as bullish to neutral. So it's got the hallmarks of a bullish stock because the current price is trading above the Ichimoku cloud, which is one of the hallmarks. Also is the blue Tenkan-sen line is trading above the red Kijun-sen line, which again is one of the hallmarks of a bullish stock. But there are a few concerns about this stock, and that is that the stock price, it was using the blue Tenkan-sen line here as a level of support, and then around here, as you can see, the stock price has punched its way through and started to use the red Kijun-sen line as an area of support here. More recently, however, you can see that the bulls have reclaimed the Tenkan-sen line, so the stock price is just about trading above the blue Tenkan-sen line for now. But the fact that it's pierced it recently in the past couple of sessions is a bit of a red flag. Should that stock price fall beneath that blue Tenkan-sen line, then again the next level of support is the red Kijun-sen line, followed by the edges out of the Ichimoku cloud. The other thing they didn't like about this particular stock is the future cloud. Whilst it is green and it was trading in an upward trajectory up until about here, it's then started moving sideways. And again, the other point we didn't like was the fact that the current future cloud, it started to thin. So the Sanka span line A has started to move downwards and Sanka span B has started to move upwards. And what's likely to happen is if it both carries on that trajectory, you're going to get a crossover, and this future cloud here will turn red and will probably be moving onto a decline. So overall then, like I said, this is a bullish stock, which it looks like is about to transition into, or could transition into, a neutral stock. Okay, let's have a look at the next clip.
All right, welcome back. Take a look at Netflix today. The stock's up 3.5% on word that Pershing Square has revealed in its most recent investor letter that it is back in that name. 3 million shares. It's about 4.9% of the firm's portfolio. And this is the sequel. The premiere, if you will, happened in 2022 and was over quickly, because Bill Ackman sold that after only 3 months after Netflix had reported its first subscriber drop in a decade. We made a little wall here to show you. They took a reported $400 million loss on that position. So that was the premiere. I think we all remember it well. Remember, that stock had a massive run to like $700 and then just plummeted. And Ackman was like, I've had enough. And he said at the time, quote, "We've lost confidence in our ability to predict the company's future prospects with a sufficient degree of certainty." Well, they found something, because they decided to make a sequel. They revealed that new 3 million share stake on Wednesday in their investor letter. I told you it's almost 5% of the portfolio, which has been somewhat remade as well, which is an interesting story, too. And now they say the following: when we first invested in early 2022, investors feared an escalating content arms race among a crowded field of streaming entrants. Netflix has since effectively won the streaming wars. Its subscriber base now exceeds any competitors by a wide margin, and that scale is self-reinforcing. And it can, quote, outspend rivals on content. So, Malcolm, you get the first crack. Ackman is back in this name.
I don't know what to make of it. I think it's great that we got the 4% pop today on the news. I'll take it. I'm glad that I bought into it as low in the slide as I did, because it gives me plenty of room to take the ride with it. I don't know what specifically he's seeing that brought him back to the table, since subscriber growth has grown, but it's actually decelerating at this point that he's jumping back into the name. I think that they're probably figuring out ways to monetize the 300 million subscribers they've already got instead of chasing too many additional ones. So I'll wait and see what additional notes they release, but I don't know that it necessarily is going to be a real lift for the shares the way that someone else jumping in.
I feel like this is making a statement that they've won the race, and the others, okay, so you mentioned what's happening with subscriber growth now, but they've only distanced themselves in terms of subscribers and subscriber growth from the competition that was thought to be maybe more robust, at least robust coming in 2022. And now they're back for a stock that's been hotly debated and has had a very bad streak.
There's a Shake Shack burger on the line with this company.
This movie has had bad reviews.
No one wants my opinion?
After Josh, is because he owns the stock.
Okay.
Yeah, I'm long. I know what Ackman. This is classic. This is classic Bill Ackman, quite frankly. he's not looking for obscure trades or degree of difficulty or pulling like tiny mid caps out of his hat. That's not how he invests. He finds unbelievable businesses with a moat, with a great brand that stumble upon tough times or a sentiment shift on the street, and he's patient and he waits and he wins. And I've seen him do this, not all the time, but I've seen him do this with a lot of big brand name type stocks. We've seen it in the past with things like Chipotle, where people thought it was just going to be health code violations forever. They fixed the business, they turned it around, made a lot of money. And I think it's going to work for him in Netflix as well. I'm hoping this sequel is not Squid Game, as a fellow shareholder here. But it's 39% below its highs. It's trying to find a bottom. Has it found one in the high 60s? Maybe it has. This is a stock trading at 20 times forward earnings. RSI is now 58. Although it's been rallying over the last week, it's got a long way to go, nowhere near overbought. They're expected to have 42% earnings growth in the next year. How many stocks can you find in the S&P 500 that could grow earnings 40% and trade at a 20 multiple? I could think of two. Uber is one, which Ackman also owns, and Netflix. There probably aren't many. So are there risks? Of course there are risks. Is there competition? Yes, we know. But in the end, if they deliver, if they execute, the stock is too cheap. It should be higher. I don't know that it's going back to 140, but it should not be 70.
That's the point I was making about monetizing the existing subscriber base instead of spending a lot of money to achieve new subscriber growth. You already have 300 million customers. That's where your earnings growth is going to come from.
And they're not going anywhere. Their churn rate is very low. They've raised prices almost every year over the last 10 years, and they've added this ad subscription tier for people that said no mas, they didn't want to pay higher. They got rid of the password sharing. They've pulled all those levers. The ad business is growing. I don't think they can get away with another price hike right this second, and maybe that's why the stock is depressed over the last 6 months. But Malcolm, to your point, I don't think it's necessary. They have sports. They have live entertainment. They have unbelievable shows. They have a lot of sequels coming back for popular things, and it should be enough.
Jenny woke up this morning and is like, I thought I was in a really good spot to win the burger bet with Josh on the total return debate between Disney and Netflix.
You're winning, but you haven't won.
Channeling.
Correct.
Where I know you were thinking about.
This is so unfair.
Now you're like, uh-oh.
No, this is so unfair. That's what I was going to say. So you stole my lines. Thank you very much. I would like to, continue my theme of celebrating the moment and being positive. So yeah, I'm up 30% on our bet in the last 4 months, and I would bet that you're right. Like, I'll bet the differential of that. I'll bet that 30% between Netflix and Disney over the last 4 months. I'll bet that closes because it is, to your point, a little too cheap. The cash flow's there. The earnings growth is amazing. I think my one pause on Netflix longer run is, yeah, you're right, 40% earnings growth this year, but then it drops to like 7% next year and 16% the year after that.
That sounds like a hedge.
I'd still rather be in. I'm trying to celebrate the moment.
That sounds like a hedge.
And I'm trying to be short term.
In all seriousness,
for a moment.
would you still rather be in
I'd still rather be
Disney
in Disney
today?
If they buy NBC Universal, that's a wild card for the stock.
Here's the thing.
That could be why you have such a depressed multiple right now.
I think the argument that we started there, I think the investment thesis on that argument remains, which is I do think that Netflix comprehensively as a business does have more competitive challenge in this AI world where it's just easier to make content. And you and I were talking about this a while ago, and you were saying, like, do you still have Netflix as a subscription? No, right?
Yeah.
You do.
No, I do.
Oh, you do. I thought you said you didn't, or maybe someone else said it because they're like, look, I watch everything on YouTube, right? And YouTube has taken over so much. But what I like about
games on Christmas, you have to have it.
Okay, fine.
They're bad.
But I don't watch games.
But they have them.
They're bad.
But I think the thing is, it is more of a one-note business. So yeah, for me and for my strategy, like I still want Disney
a one-note
because
business.
They have.
I think
Josh listed all of the things on the platform.
Compared to Disney, Malcolm, you can't even go there. Disney, like, I don't want to open up the whole thing. The point is only, I think the differential closes before year end, right? I don't think we end up with a 30-year gap, so there's probably more upside for Netflix in the balance of the year. In the long term, I still want something that has a more diversified, more analog
The
business.
one note is why I like the stock and don't own Disney. I want the one note. The one note is an insanely profitable business that they dominate and probably will a year from today, no matter what the other streamers do.
All right.
And they don't have to sell churros.
So listen. Our bet expires at the end of at the end of December. You'll buy me my burger then, and then we'll consider renewing it for a year ahead.
I'm going to make you feed me my burger.
That's gross.
God. Kate Rooney, please, quick.
How do I tell?
Welcome back. So industrials, third best sector so far this year, up almost 20%. And that's where we find our moves today. At least two more, or three, actually. Stephanie Link, you bought Timken. This is a new position.
Yeah.
Why?
Stock is down 11%, and they are involved in automation and robotics. And I think we're in very early innings in that particular theme with huge total addressable market. They're the industry leader. They also have a self-help story, Scott. You know I love self-help stories. Fairly new CEO. It's called Elevate to Outperform, selling non-core businesses, low-margin stuff, and focusing on higher growth, higher margin businesses like in rail, power generation, etc. So it is certainly an AI play as well. Their goals are to grow revenues of 11% by 2028, but gross margins to be up 700 basis points. And so you're going to see a 55% earnings growth rate by 2028. And they've been a great steward of capital, 13 consecutive years of an increasing of the dividend. So 15 times forward estimates.
Okay. And Jenny, you sold Stanley Black & Decker.
I did. So this I bought a little over 3 years ago. I've had a 45% return in it, including the dividend. And when I bought it, the investment thesis was that when earnings stabilized in 2025, they should be about 40% higher. So that played out. It took a little bit longer than a year longer than expected, rather, to get that total return. So 12.5% annualized return, that's fine. Certainly not amazing compared to the market, but it's been an okay investment. I think the thing that's more interesting about this, Scott, is that I'm sitting on the cash from it, because I don't have anything in this moment here and now to buy. I've got a pretty decent short list of potential candidates, but they're all a little rich for me, and I don't want to bump up any of the other positions in the equity income strategy. So I'm hoping for some messiness in the market that knocks the wind out of something. I can be opportunistic, buy something down 10 or 15%. But that's it. It's discipline. By the way, if you don't own it for the dividends specifically, I think you can keep holding it. The earnings growth ahead is quite decent. It's down to a 3.25 yield. And so for me, from a risk management perspective, I look at that and say, I can get 3.35 on a money market fund. Why take the risk?
What's your floor for the dividend? You need 4% to even consider it?
Okay, for the portfolio overall, I have to maintain a 5% or better dividend yield.
Okay.
So I can buy something at a 3.5.
But it'll drag down your average.
It'll drag down, yeah. Wow. And so this is the blessing and the curse of the strategy. It forces a really strict sell discipline. So if you're in it for growth, and by the way, it's a dividend aristocrat. If you're in it for growth, I think you can keep holding it.
Well, you also added to Carrier, right?
We added to Carrier. That was in our disciplined growth strategy. Now, interestingly, we trimmed Carrier several months ago at 80. It's down to 63. So we bumped that up. Huge free cash flow. All the positive trends in the economy that we're talking about, pushing it up. So that we just bumped up as a position. And again, different strategy that it was added to it.
Okay. Coming up, Josh Brown's best stocks in the market. The spotlight is shining on an under-the-radar data center play.
Get your cash ready, Jenny.
Just made it on the list.
Okay, so that was the second clip there from CNBC. And by my count, there were 4 stocks that were specifically mentioned during those segments. It was Netflix, Timken Company. So this isn't a stock that's featured on our show before. And to be honest, it's not a stock that I've heard of before. We also have Stanley Black & Decker. I think that was one of the stocks that was a sell by Jenny Harrington. And also Carrier Global. Again, this isn't a stock that was featured on our channel either previously. Anyway, starting off with Netflix. So Netflix, as I'm sure you're all aware, used to be a behemoth of a stock, but over the past year or so, it's completely plummeted, probably because of high competition from the other subscription-based channels such as Amazon and Disney, Apple, to name a few. Anyway, let's start off by looking at those Ichimoku indicators. So again, as a recap for this segment, this here is the Ichimoku Cloud. We then have the future Ichimoku Cloud here. This blue line here is called the Tenkan-san line, and then we have the red Kijun-san line over here. And then at the back, we have what is known as the Chikou-span line, or the lagging line is also known as. Then these candlesticks here represent the price action. This one here, the current price action. So that is the overall overview of the Ichimoku indicators. So using Ichimoku indicators on Netflix then, so the first point to consider is the proximity of the stock compared to the current Ichimoku Cloud. So as you can see, the stock is trading substantially above the Ichimoku cloud, and that is one of the indicators of a bullish stock in the Ichimoku cloud system. So that's a tick in the bull column, a massive tick in the bull column actually. Number two is the fact that the current price action is trading above both the blue Tenkan-sen line and the red Kijun-sen line. Again, that's one of the hallmarks of a bullish stock, as is the fact that the blue Tenkan-sen line is trading above the red Kijun-sen line. Again, that is a massive factor in the Ichimoku cloud setup. One thing I particularly like about Netflix actually is the distance between the blue Tenkan-sen line and the red Kijun-sen line, because once that blue line crosses over the red line, then the stock has a propensity to tank and become a bearish stock. So the further that blue line is away from that red line, the better it is for Netflix. Another thing I should mention about the blue Tenkan-sen line is the trajectory of the stock, sorry, of the line. Is in a clear upward pattern compared to the sideways trading Kenjin-sen line. Again, these are all the hallmarks of a bullish stock. Next up, moving on to the future Ichimoku cloud. You can see that the future Ichimoku cloud is green, and it is moving in a well, it was moving in a slight upward trajectory. The Senko span B line, which is this line here, is moving sideways, but the Senko span A line here is moving in a upward trajectory. And again, that is indicative of a bullish stock. So the fact that the future cloud is green is a positive, but also the fact that the Senko span A is moving away from Senko span B is going to create a funnel. And why that's important is because it creates a thicker, greener future Ichimoku cloud. And as discussed on some of the stocks like Micron, a thick green cloud is exactly what you want because it adds another additional level of support for the stock. Should the stock fall through the blue Tenkan-san and the red Kijun-san, then the thick green cloud offers the support before it falls through and becomes a bearish stock. So the thicker the green cloud, the better it is. Then lastly, you've got Chica Span A line, which is trading above the historic price action. So again, that is also one of the hallmarks of a bullish stock. So next up, we're going to take a look at Timken Company. So again, this isn't a stock that's featured on the CNBC halftime report before. Sorry, that's featured on our channel before, should I say. I don't know if it's featured on the CNBC halftime report or not. So again, at a glance, you'll see that this has got the it hits all the indicators of a bullish stock using the Ichimoku indicators. So again, starting with the current price action compared to the Ichimoku cloud, you'll see that the price is trading above the Ichimoku cloud, albeit only slightly. It's not like with Netflix where it was significantly above. With this particular stock, it's only slightly above, but it is above nonetheless. Next up, you'll see that the stock price is trading above the Tenkan-sen line, and it's also trading above the Kijun-sen line. Again, that is another one of the other hallmarks of a bullish stock in the Ichimoku setup. We've also got the added advantage, which is a massive factor actually, is that the blue Tenkan-sen line is trading above the red Kijun-sen line. Again, that is one of the hallmarks of a of a bullish stock. And the proof, as they say, is in the pudding, because you can see here, if you just follow my cursor around here, that the blue line was trading below this red Kijun-sen line here. And at that point in time, the price action was trading below the Ichimoku cloud up here. And when the line has crossed over here, that's where the crossover occurred. You can see that shortly thereafter, the price action has pierced the perimeters of the Ichimoku cloud up and is now trading above the Ichimoku cloud. So again, that was another Ichimoku indicator for a bullish stock. We also got the future Ichimoku cloud as well, which is green and is moving in a upward trajectory. Senko span A line over here is pulling away from Senko span B, creating that funnel effect that was just discussed. So again, these are all the hallmarks of a bullish stock. And then lastly, you've got the Chica span A is trading above the historic price. Chica span line is trading above the historic price action, which again confirms the bullish nature of the stock. Next up, we're going to take a look at a Black & Decker. So this was a sell today by Jenny Harrington. And you'll see that this has got all the hallmarks of a bearish stock. So firstly, you'll see that the price action is trading below the Ichimoku cloud. So that's the first point. The second point is, which is quite interesting, is that quite recently the blue Tenkan-sen line has crossed below the red Kijun-sen line. So we've now got that dreaded Tenkan-sen Kijun-sen crossover. So that's the next red flag. The other red flag is the fact is that there is no support, no obvious support for the stock. So the stock price action is currently trading below all the Ichimoku indicators. That's the Tenkan-sen, the Kijun-sen, and the Ichimoku cloud, the Kumo cloud itself. Next up, you've got the future Ichimoku cloud, which, whilst it's currently green, it's trading in a sideways pattern, a horizontal pattern, which is a bit of a red flag. We've also got the fact that the future Ichimoku cloud, it is very flat. Again, that will possibly could work in the bull's favor because it won't offer as much resistance. But you'll also note as well that there has been here, Sanko span A has crossed over Sanko span B, which means that it's highly likely that the Ichimoku cloud is going to start trading in a downward pattern, and the Ichimoku cloud, the future Ichimoku cloud, is going to turn red. Then lastly, you'll see that the Chica span line is trading below the historic price action. And again, that's confirmation of a bearish stock. So overall then, this is probably not a stock that you want to dive into right now. If it is a stock you're interested in trading in or investing in, I'd probably wait for the next couple of sessions to see how this stock pans out and whether the price action can reclaim the Tenkan-sen and the Kijun-sen and the bottom of the Ichimoku cloud itself. Next up, last but not least, is Carrier Global Corporation. So this is quite an interesting stock because it's currently trading below the Ichimoku cloud, confirming the bearish nature of the stock. Having said that, though, it is trading above the blue Tenkan-sen line, and the blue Tenkan-sen line is moving in an upward trajectory. However, we have got this dreaded Tenkan-sen, Kijun-sen crossover over here. That confirms the bearish nature of the stock. We've also got the future Ichimoku cloud as well. It's trading in a, well, it was trading in a downward trajectory, but quite recently it's moving in a horizontal pattern. So I would say this stock, then lastly, you've got the Chica span line here trading above the historic price action, which almost confirms, ordinarily it would be confirmation of a bullish stock. So this is where I see Carrier Group right now on those indicators. The fact that it's below the Ichimoku cloud is indicative of a bearish stock. However, there are a few things that are going on which could signal a reversal. So number one, the blue Tenkan-sen line is starting to move in an upward trajectory. It looks to me like the Ichimoku cloud has stopped trading downwards and has now bottomed out. It also looks to me like the bottom of the cloud is being tested here by the current price action. And if that price action can pierce the cloud, then it moves in, and once it enters the cloud, it's confirmation of an equilibrium. It's neutral. We don't know what's going to happen. So I would categorize this as a bearish stock, which could become neutral quite soon. We've also got the uncertainty of the lagging line, the Chica span line back here, because it is trading above the historic price action. But as it moves on, you'll see the actual historic price action is up here. So again, this is very much a wait and see type stock. Okay, let's move on to the third and final clip.
We're back. Josh Brown's best stocks in the market. The spotlight's on Ferg.
Yes.
Ferguson Enterprises.
Yes.
FERG.
Yes.
Why?
Not Fergie, not London Bridges or Black Eyed Peas. Ferguson. Nobody knows this stock, and I'll tell you why. The company has been around for 75 years, but it spent a lot of time traded on the London Stock Exchange. A couple of years ago, they realized this is stupid. There's a huge discount. We should get back to our roots in Newport News, Virginia. We should get an S&P 500 listing, and we should narrow the gap in valuation versus all of the companies in our space that are in the United States. They have done that. I would argue the stock has got some of the credit for that, but there's way more coming because while they've become a U.S. Traded and listed name that people now are becoming more familiar with, they're seeing a big improvement in the industrial side of their business. So when you think of Ferg, I want you to think of cool. It's running water, plumbing, and it's HVAC. And the industrial component, you guessed it, a lot of demand from data centers and all of the other industrial projects that are happening all over the country, all over the world. Ferg is the largest supplier of equipment. And the strategy here is dual contractor. So there's a lot of people doing plumbing that are also doing HVAC. And Ferguson gets 2 bites of that apple. So the strategy is bearing fruit. Jeffrey says a $289 price target. Put the chart back up because I want to talk about technicals for a second. What's held this stock back is the whole business isn't industrial. There's a residential housing component, which we all know. The housing market sucks, et cetera, et cetera. We won't spend any time there. I think the market is going to let this thing break out. I think the buyers are going to take this thing above 250 because at a certain point, housing is no longer a drag. It's just blah. And you get this data center component that is contributing more and more of the earnings. So it's made 3 attempts to get above 250. It's failed 3 times. I don't believe in triple tops. I think ultimately this thing takes out that high. So what we told people in the pro column, Scott, we're stalking the stock. We're watching its behavior the next time above 250. If the sellers dry up there for the first time after multiple attempts, that's going to be our signal that this baby's ready to break out. It's been on and off the list for the last year. You could see how choppy it's been in this channel. Someday, the sellers will run out of ammunition, and this thing's going to be like a beach ball you were trying to hold under the ocean for too long. It's just going to go. And I think that day will happen between now and the end of the year.
All right. Thank you very much for that. That's Josh Brown's Best Stocks Spotlight. Up next, Mike Santoli, his midday word. It's time for finals. Malcolm Etheridge.
Yeah, I'm going Netflix again. Won't be trading at 20 times forward forever.
Jenny.
Cisco, get it on the weakness.
Stephanie Link.
Union Pacific.
JB.
CrowdStrike now up 100% over the last 52 weeks.
Better
Undisputed.
Run. All right. I'll see you on the bell. The exchange starts now.
Okay, so that was the third and final clip from today's CNBC halftime report. The stocks worth mentioning there were Ferguson Enterprises and CrowdStrike, which was Josh Brown's final trade today. And Ferguson Enterprises obviously featured in Josh Brown's favorite stocks in the market. So let's start off by taking a look at Ferguson, which he said he was going to be monitoring over the next couple of sessions. He thinks that this has got the propensity to explode before the end of the year. But what we're going to do is we're going to use the Ichimoku cloud indicators to assess the short-term trend of this stock at least, and see if it's worth investing in the short term. So again, using those Ichimoku indicators as a recap, this is the current Ichimoku cloud. This is the future Ichimoku cloud here, and in fact, it's this cloud. We've then got this blue Tenkan-san line here, and then we have the red Kijun-san line over here. Then lastly, we've got this lime green Chico span line, or also known as the lagging line. So overall then, the first port of call is looking at the current price action compared to the Ichimoku cloud. So you see that the current price action is trading significantly below the Ichimoku cloud, which is one of the hallmarks of a bearish stock. Next up, you'll see that there has been the dreaded blue Tenkan-san Kijun-san crossover. And once this has occurred, that is where the stock price has effectively plummeted to its current levels. So again, that crossover where the red Kijun-san is trading above the blue Tenkan-san is one of the hallmarks of a bearish stock. Also, again, future Ichimoku cloud moving in is red, moving in a downward trajectory. And then we've got the Chica span line back here, lagging line trading below the historic price action. It's also trading below the historic Ichimoku cloud itself. So these are all the hallmarks of a bearish stock. So if you are a bull and you are thinking investing in Ferguson for the short term, what you'd want to happen is this current action here to reclaim or test and reclaim this red Kijun-sen line there. And next up, test the outer perimeters of the Ichimoku cloud, and then the upper perimeters of the Ichimoku cloud before trading above the Ichimoku cloud. So again, as a recap, we want this stock here to be trading above the Ichimoku cloud. We also want the reversal of this red dreaded Tenkan-sen Kijun-sen crossover, and what we want to see is this blue Tenkan-sen line roll over this red Kijun-sen line here. And once that happens, that will also be confirmation of the bullish nature of the stock. We'd also want this future Ichimoku cloud to start moving in a upward trajectory and ideally turning green, by which we would want to see Sanko span B here and Sanko span A crossing over. And then lastly, Chico span trading above the historic price action. And until those Ichimoku levels, until all those indicators are aligned, then this is probably a stock to hold off for the immediate, unless of course you are a long-term investor. Next up, we're going to take a look at CrowdStrike, which was on Josh Brown's final trades for today. This paints a very different picture to Ferguson stock. So firstly, looking at the position of the current price action compared to the Ichimoku cloud. So the current price is trading significantly above that Ichimoku cloud, confirming the bullish nature of the stock. We've also got the fact that the future Ichimoku cloud is thick and green and moving in an upward trajectory. And the thing we like about this particular stock for the bulls is that the blue Tenkan-sen line is clearly trading above the red Kijun-sen line as well. And also the current price action is trading above both lines and is in fact using that blue Tenkan-sen line as a level of support. You can see how it moves up, it's using that as support. And why this is good is because it means that should the stock price fall slightly and it falls through that blue Tenkan-sen line, it's got two additional levels of support with a red Kijun-sen line and also the perimeters of the Ichimoku cloud itself as levels of support before it falls through. Again, the thing we like about this particular stock is the Chico span line is trading above the historic price action, confirming the bullish nature of the stock. So overall, then this is a stock which ticks all the boxes using the Ichimoku cloud setup. The only thing that I would be cautious of with this particular stock is how close the Tenkan-sen line and the Kijun-sen line trading together. Because like I said, once that crossover happens, there's a tendency for the stock to plummet. And if you look, you'll see that there's been a number of crossovers in recent trading sessions here and here, almost here, but not quite, here and here as well. So as you can see, the stock price, it has been fluctuating by quite a lot. So again, that's something to watch out for. Anyway, that's it for us for today. Tune in again tomorrow for another video. Thank you very much.